Welcome back to the Stockwell Eldridge Show. Every Sunday, 10 a.m. here on AM 1280 The Patriot. We have special guest Jack Benke here with Spectra Home Mortgage and Stephanie Havel with Wells Fargo, talking about how you can purchase a home during the parade here through a conventional mortgage product, FHA product, or reverse mortgage product. And up at not Humboldt Greenway. That's another one that's available, Humboldt Greenway in Minneapolis. But we're at Roseville Garden Station in Roseville. You can buy that if you're 62 or over. We have a slogan that says, yes, you can. If you're 62 or over, you can buy that, and your monthly payments will be around, including your association dues, your gas, electric, and taxes, $800 a month. So if you qualify. So that's the type of excitement that we want to get to see people that, yes, you can do this and buy something for $350,000, $400,000, $450,000 in that range, even though you're not getting all that out of your current home. Because a lot of people want to do a lateral move, Jack had alluded to, where they want to say, I have my house paid off here, and I only want to take that money from this home and put it into my new home. How can I do that? And the answer is you can do that. It probably won't be new construction, though. And it may not be a single-level townhome site. It'll probably be maybe a condo or a co-op or something like that. And then when you get into co-ops, you have high monthlies every month as well, which may be higher even than Roseville Garden Station.
Well, and I think, too, with the association dues, I mean, granted, even if it's a house, sometimes we get people, well, I don't want to pay these association dues. It's so expensive. Well, factor in the cost of a lawnmower, gas, maintenance, a shovel, a rake, and all those things. And I can tell you, I love townhome living. I love that they cut my grass. I don't like it when they're out there with the weed whip at 7 a.m. on a Monday morning. Like, seriously? You couldn't wait till like 10. Okay. But it's great. I mean, it's more free time. Like you say, don't worry about, and you talked about going on the roof and cleaning out the gutters and all that kind of stuff. I mean, I think homes with an association is awesome. And you get a say, you can go to your meetings and decide what lender or landscaping company is going to do your...
Yeah, you can be actively involved in the association.
Take that free time, spend it with your grandkids or your kids instead of mowing the lawn or shoveling the snow.
One of the things with the reverse mortgage program, you just brought up condos, is that there aren't a lot of condo associations around that have their FHA approval. Mm-hmm. And that is a condition of purchasing a condominium with the reverse mortgage program. They used to do what was called a spot approval, where your particular unit might be approved, but that's no longer allowed. They allow it on our jumbo product, but not on the traditional FHA reverse mortgage program. And we were talking a little bit about the history of this program. Just finish up a little bit. In 2014, they dropped the amount that eligible borrowers could borrow, their principal limit, so to speak, their percentage. And the reason they did that is to maintain the viability of the program. So our listeners should know that this program is very solid. It's going to be around for a long time. There's plenty of funds in the insurance program in the event of a default, or this being a non-recourse loan. And I don't want to get too technical, but say you're an aging adult and you live long enough in that home, and we go through another crash in the real estate market, it's conceivable that you could possibly owe more on your loan than the home can be sold for. And FHA's guarantee to the reverse mortgage borrower is you can never owe more on that home than the home can be sold for. So young people who were purchasing a home back in 2005, 2006, 2007, they would have gladly paid an additional mortgage insurance premium to have that kind of protection.
Yeah, that would be
amazing.
And
so
protection.
Seniors are eligible for a very exclusive product here that can protect them in good markets and bad markets. So I think it's something to certainly consider for your situation if you're looking to transition from a home that no longer meets your needs to a home that will meet your needs and meet your needs for a considerable time into the future to help you remain independent.
That's a great point. So call us if you have questions about this. We'll put you in touch with Stephanie Havel at Wells Fargo, or we'll put you in touch with Jack, or both. depending upon if you're debating on a program, or if you're at that age group where you're close to 62, or you might want to do an ARM in the interim, and then plan on doing a reverse mortgage afterwards at that time. But they can explain the lending process to you and how these things work, so that, and usually with a dialogue or face-to-face or a phone call meeting, but because you can actually see the numbers, you can see how they are legitimate. They're not, no one's being taken advantage of if you do these things properly. There's a lot of checks and balances put in place now, and you can call us at 651-400-0773, 651-400-0773, and you'll find both Jack and Stephanie's information on our Facebook page under the Stockwell Eldridge Show. And we'd be happy to, and you probably see both groups at our model at Roseville Garden Station if you come by there to check it out. And Jack just made a good point too, is, okay, if you're at the retirement age, if you're 55 or older, or 60 or older, and you're in that age group and you're listening right now, we have so many people that come into the model that when we're in Roseville, and they explain the hurdles or the agony or the pains that they have in their current home that they've been in for 30, 40 years. And they're little frustrations, but they put up with them over and over and over again. It should be time now for you to go into a place where you are happy. It's what you want. It has the amenities. It has the space. So you don't have to bump into your dresser because you're in a 12 by 12 master bedroom with a king bed. You don't have to squeak through the doorway because you have a walker and you can't get into your door. You have to turn sideways or something like that. You have an open kitchen where you can get around. I mean, there's so many things in here. It's what you deserve. You've worked your whole life. You've paid your home off. Why go through that? Is that just something that generation, I think, I speak of the silver fox or gray hair or silver hair tsunami as we refer to it. All the baby boomers, which you guys that are listening, put off that. It's like you maybe don't feel like you deserve that new home or that new environment, right? Is that what, Jack? Is that maybe adequate statement for the generation?
Yeah, it's tough to address the concept of using your home in your retirement, because it was, impressed upon you growing up by your parents, probably get your home paid for.
Yes. Yep.
But that's a phenomenal asset to leave out of your overall comprehensive financial plan. And in most cases, it's probably equal to or of more value than they have set aside for their retirement. So to go into those funds is traumatic. And it reduces that window that they have, that they can feel comfortable, that they have these resources to draw on over time. So if you can accomplish changing your living situation to a safe scenario, and you haven't touched a dime of your retirement account, and you've been able to demonstrate that the $700 a month or $750 a month that it's going to cost you to stay in that home is not going to be a burden on you, you're way ahead of most aging adults. And you're going to be much safer. You're going to be much more comfortable. In some instances, you're going to be with people your own age. You're going to have new construction, which takes into consideration mobility issues. They have the 3.0 doors, like you talked about the development that you're working in right now. I walked through it and I thought, this is perfect for somebody my age. I'm 68, and I'm thinking ahead. Now I'm healthy, but it doesn't take more than a hip replacement or a couple of knee replacements for one or the other spouse, and all of a sudden lugging those groceries up from the tuck under garage, becomes a real concern. And I find that children with aging parents are starting to nudge their parents a little bit, mom, dad, this may not be the safest place for you to be. And so if we can help them be comfortable with just using a portion of those assets. Remember, they're only going to put 50% into it, but that equity is still likely going to be protected because of the miracles of appreciation. And without getting too technical, as long as the appreciation exceeds the loan expense, then the equity they put into that home is going to remain intact, isn't it? Yep. And I would guess that the monthly expenses, because of the deferred maintenance we talked about on an existing home, could exceed the $700 a month that they're paying in the brand new construction because of the cost of roofs and mechanicals and windows and siding, insulation and floors and carpet, furniture. I mean,
so I think
get pre-approved. Well, what were you going to say?
Yeah, and it comes down to the cash flow and having a reserve safety net. So you hold. So here's how you win. You hold your reserve safety net. You less cash flow out per month, so you're getting the best of both worlds, and basically leveraging it the best way you can in a smart way, without burning up money and then feeling insecure at the end. So
and talk to your lender ahead of time. You've got time to prepare for it at least.
Absolutely.
So before you go to look at the houses, you can at least have a consultation.
We'll be back with more. Stay tuned. Thanks for listening.
In the state running through his front yard.